Hi, Mitch Argon with Calneva Realty. Welcome back for another market update. This is November 2025, and I want to start off by wishing all of you a very happy and healthy Thanksgiving Day. Let's get started. Okay, here we are, November 2025, for a quick update and some insights into the market. First off, as we typically do each month, median price by market. As you can see, a little bit of a mixed bag, but moderating for the most part. We're still seeing modest price appreciation, but have pretty much been flat, as we've talked before, on a flat line since the middle of 2022. This goes back 2 years, so you can't see the full 3-year look back to the middle of 2022, but we had this slight dip late 2022 when rates started to rise. Things picked back up on terms of pricing, and it's been fairly flat. If you look at these numbers across here, you can see that for the most part. So Reno, you see 635, 655 going back 1 year, and 600 back 2 years. That is not necessarily a straight line increase. That's a low month, generally speaking. This goes back into late 2023. By measure, I think the median price in Reno in June of 2022 was 630 or 640, somewhere right around there. So just as a reference. Moving on, taking a look at homes sold. You can see some red ink here, so we're down a bit in these areas, up a little bit in some others. But generally, we're holding about steady. We have noticed in the marketplace decreased activity in terms of showings and a longer time for homes going under contract. We can't tell if that's seasonal right now as we're going into the holidays, maybe an early start of the holidays. We don't really know if that was affected in some cases by government shutdown and some of the anxiety that came with that. But we are seeing a little bit of softening in the market. It hasn't shown up yet in prices or in volume of homes sold, but it's showing up kind of at the street level, if you will, for us who are practicing every day. Month supply of inventory over here, you can see holding pretty steady, 2.8 to 2.8, 2.3 to 2. We're still technically in seller market territory as the market continues to soften just a bit. You can see here Carson Valley is at 3.9. That's up 17% from 1 year ago. And Dayton up 43% from 1 year ago, but still well in seller market territory. So we have not seen substantial or really any inventory growth, which I'll touch on in just a little bit. So with regard to inventory, you can see we're slightly up from, Dayton's up quite a bit, but we're slightly up from where we were a year ago. We are up overall. I'll show you this on a visual here. So I'm looking at Reno since that's the largest market. It's the easiest line to see here, but here you see inventory up here at 726 earlier this month. If we go back 1 year, you're at 700, so a modest increase from 1 year to the next. If you go back 2 years, we were in a much stronger seller's market, and you can see we're down at 511. So you're almost a 50% increase from 726 to over 511 going back 2 years. That listing inventory doesn't get burned off, and so that's why you see that month supply of inventory staying fairly low as we look at these numbers. As you can see here, Carson Valley flirting with the neutral market up here. Everybody else still pretty well in seller market territory. So with regard to inventory, we've talked about this in prior months. Many of the markets, I shouldn't say many, but a number of markets, in particular in the Southeast and moving towards the West, but all kind of the southern markets, have seen some price softening, price depreciation, and their markets kind of flip. And so the question we've asked ourselves here is this going to happen in our market? And if so, when? The leading indicator for all of these markets for doing this is a rapid rise in inventory or a steady rise in inventory. And the metric that we've been looking at, or the standard, is how does your inventory in your market compare to inventory levels in 2019 pre-pandemic? Because things got kind of crazy and very unusual, of course, starting in 2020. So this is a chart we've looked at each month. You can see this line here, which is kind of this orange thick line, is the 2019 line. This kind of little darker, more burnt orange or brown line through here is 2025. And as you can see, we're still, well, we get a little bit closer, we're still underneath this 2019 line. And so I don't see our market in the very near term going through a major change that will lead to price corrections. If this number here starts to get above that line and it starts getting well above that line, then we will see that market change happen. And some of these markets that we're talking about, like Austin, Texas, their inventory levels are like 150 to 200% of 2019. So to put that into perspective, we're sitting at 1437 right now. If we were at 200% of this 1554, we'd be about 3,000 homes in the market. That would feel like the market is pretty well flooded. And of course, that's what creates downward pressure on pricing, and that price does get adjusted down accordingly. I wanted to share with you some interesting statistics that just came out from the National Association of Realtors. Just as food for thought, I'm not going to go into a lot of explanation on these things, but I think it's worthy of being aware of, and it speaks to the current markets on a national basis. So I'm going to switch gears. This is not Northern Nevada data. This is national data from the Association of Realtors, NAR. They do an annual study every year. We subscribe and pull information out of that to help us in our business, to give people guidance, understand trends, and so forth. It's called the 2025 Profile of Home Buyers and Sellers. And here's a few stats. Some of these are a little surprising. In 2025, all cash buyers was at 26%. We are there or a little bit higher in our market, depending on the specific locality here. But that is an astonishingly high number for all cash buyers in the 2025 housing market. By way of contrast, in 2003, 7%. Big change since 2003 to 2025. First-time home buyers. The median age for a first-time home buyer has been rising, and in 2025, that median age is 40 years old, which is something to think about. In the mid-'80s, that was in the mid-20s. So we're talking about a 40-year period here where the median age of a first-time home buyer has gone from the mid-20s, say 25 to 40. Quite a big change. Of course, all this is driven from affordability, which is the main topic in housing and in other parts of our economy. First-time homebuyer market share is at 21%. That's the lowest it's been, I think, since it's been being tracked. So 21 homes out of 100 homes are being bought by first-time homebuyers. Pre-2008, so we're getting before the recession, that number was 40%. So again, you can see pressure on first-time home buyers showing in a couple different ways. Repeat buyers median age, so that means that half the people who bought homes that were not first-time home buyers were above this number, half were below this number, but the median age is 62 years old. So first-time buyers and repeat buyers of homes are basically getting older. This is largely a function of affordability and the money, the capital it takes to buy property, to put down payments and afford these payments at these interest rates and so forth. Last one here, years staying in a home. How long do people plan to stay in their home? Well, in 2025, people were actually in their homes for 11 years from this study. In 2008, that was 6 years. So with the affordability and people not moving as much because of the cost of trading up their mortgage, people are staying in their homes longer, and they're staying put. So again, each one of these could have a separate, probably 5-10 minute conversation around it, but these are just some trends I thought would be interesting to share with all of you. Food for thought, something to think about. And if you have any questions, further questions, you could talk with any of our agents or myself. We'd be happy to chat with you about that. Okay, that's going to wrap it up for this month. Again, I wish all of you a very happy Thanksgiving. I hope you have a restful weekend with friends and family. If you're traveling, safe travels. Hope you're not going to be delayed too much. Looks like weather's going to hold up pretty good across the country, I think. Until next month, thanks for watching. We'll see you next month.